Good afternoon, this is Sean Golden with Golding & Golding, here to discuss a little bit about how expats and other taxpayers with international reporting and income-related issues can try to minimize the chance of audit or examination. When it comes to international tax compliance, we're mainly dealing with things like foreign bank and financial account reporting on forms like the FBAR, Form 8938, and the 1040, of course. Foreign asset and entity reporting, for example, you may have a foreign company, you may have a foreign partnership. Foreign gifts, trusts, and inheritance, this is Form 3520. Taxpayers who receive foreign gifts, inheritances, and foreign trust distributions are required to report it. If you happen to own the foreign trust, you're required to report 3520A as well. So, three very common IRS tax audit triggers for taxpayers who have foreign accounts and assets really relates back to FATCA. FATCA is the Foreign Account Tax Compliance Act. More than 110 foreign countries and hundreds of thousands of foreign financial institutions have agreed to report a U.S. account holders to the U.S. government. So, the first one is the 8938 quiet disclosure. Right? Some taxpayers think, I'm just going to sneak in the FBARs and I'm going to sneak in the Form 8938. Here's the problem with that. If for any reason you're audited for the 8938 and they see that you submitted it late, if you look at the 8938, it's a little different than the FBAR. It asks whether the account was open in that year or not. Either you mark that it was, and that's a misrepresentation, or you intentionally omit and don't mark anything, and that too is an intentional omission or misrepresentation. Substantially inaccurate FBAR and Form 8938. Some taxpayers have accounts that may be artificially high during the year because maybe they sold a property or they had an inheritance, but they quickly shifted the money out of those accounts. Again, with FATCA and the reporting, the U.S. government may have that information already. So if you artificially reduce the value of the account because you're just not comfortable reporting a high 6, 7, 8-figure account, if you get audited, it could cause a problem. Another common issue is when taxpayers fail to report foreign income because they think, the foreign financial institution is never going to report. We've been with them forever. My great-grandparents used that bank, and now I use it as well. The problem is, under FATCA, when these FFIs are reporting U.S. account holders, they also report income associated with the account. So, especially if your foreign income is associated with these bank accounts or other assets that are reportable, there's a chance that you could find yourself on the receiving end of an audit. Some other audit triggers outside of FATCA specifically. Schedule B is inaccurate. So, you have to avoid the fear-mongering for this. There's a lot of people who go, if you automatically put no for if you automatically put no for Schedule B, then you're willful. But that's not true. Even the IRS has said that, and they've said it in writing. So you want to be cautious to try to accurately report it because you don't want to be subject to an audit or examination, then have to explain it if you didn't do one of the offshore disclosure programs if you were audited beforehand, for example, and you're no longer ineligible. But Schedule B, you want to try to get accurate if you can, and if you didn't get it accurate, you want to fix it. If you are filing with a foreign spouse, let's say you made a 6013G election, the foreign spouse's income is reportable, so you can elect for the foreign spouse to be included on the return, but then not include the foreign spouse's income just to reduce your income tax. So if you make $400,000 and your spouse makes $300,000 and it's a foreign spouse and you want to report them together, you guys want to report together, you have to include the foreign spouse's income if you're going to include it as a married filing joint return. One thing to keep in mind, when you file a joint tax return with a non-resident that you made an election to treat as a joint return, if the 8938 is met, you have to file that, but a 6013G election for a foreign person who's not a U.S. person to elect to be treated as a U.S. person for tax purposes does not mean they have to file the FBAR. If you're out of compliance and you're worried about being audited or examined, because if you are, then you no longer qualify for the amnesty programs, there's various programs to assist you with getting into compliance. If you're willful, you could do the VDP, Voluntary Disclosure Program. If you're non-willful, there's various options available to you. There's the streamlined procedures, delinquency procedures, and reasonable cause. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.